Hey traders, welcome to our Sunday Notes Live. This is our weekly look at the markets together as we get the open at 6 o'clock Eastern Sunday evening. Great to see you all here. All right, so we are going to take a look at these markets together and, of course, answer your questions. We're also going to discuss some of the notes that if you are a member of one of our simpler trading services, futures, options, and of course, my Sector Secrets Mastery. The link for the notes is available. So hopefully you all have had a chance to take a look at those. All right. So just a couple quick things about what we're dealing with right now. Overall, I won't say it's status quo because a lot of the trends are accelerating. They've gone parabolic and we're put in positions, for example, in UNG, where we do have a long position and we're waiting for another opportunity to get a pullback. I mean, that would be, oops, that is not what I wanted to do. Where'd you go, chart? There we go. And we're waiting for another opportunity for a pullback to get long. And then we're in situations like crude oil, where we do have, chop, but the chop is coming off a bullish trend. So there's definitely a bullish bias to the chop, which means we want an oversold buy if we're going to do anything at all. Because in many ways, if we want to play crude, we're going to be so much better off focusing on crude via oil stocks and even through the sectors like XOP, where we have exposure to oil and also natural gas via that Oil and Gas Explorers ETF. But we have situations like crude where we have chop. And this is something we'll talk a lot more about. I think most of you are already aware. Let me go grab my drawing tools here. Where the heck are they? There we go. So I'm sure most of you are already aware of these tools because I've been sharing them for actually many years at this point now, where we are down in this area. So you can probably see this green line. You know what? Maybe you can't see it. Let me see if I can't make this a little bit thicker. This is the built-in slow stochastic on the Think or Swim platform. So any one of you could set this up, or if you're using the layout that I share with you all in the Simpler Trading Room drives, you can get this all set up on my layout with some of my other free tools from the get-go. But let me just make this a little bit thicker so you can see that maybe a little bit better. Let's see how that looks. So I try to find really good, easy to read colors and fonts for you all to see. There we go. That's a little bit easier to see, right? Okay. So you can see that down here at the bottom, we're below. See, this is the low line, right? That's support. If you want to look at it this way, that way, this is the high line. This is 80. This is the 80 reading on the slow stochastics. This is the 20, right? This would also be considered oversold. That's another way to look at this. And up near the top would be considered overbought, right? Overbought, high, 80. It's all the same thing. So if we're down here at this support area, and we're also sitting at Darvis support, and that purple line is our Darvis 2.0 support. This is how we put together a neutral yellow market. Take a look, neutral sideways wave. And then we have from there, overbought, oversold conversations, right? Only then, that sideways wave do we start thinking about stochastics plus Darvis to get us longs. That's another zone we can take a look at. So there's some neat things that are in play right now, but make sure you're differentiating trends from chop. And if you have chop, make sure there was a really clear trend that preceded it so that you have the path of least resistance still in many ways, sort of mapped out for you. All right. With that being said, these shows are, of course, all about your questions. And I'm actually going to see if I can't move this chart up just a little bit. All right. So it doesn't cut off with our questions section. There we go. That ought to work. and we'll get to it. All right. Actually, let's see if I can't do that. Oh, that's even better. Perfect. There we go. That's even better. All right. So, first question, let's kick it off. Hey there, Mike. How are you? How well do the inflation plays tend to work after the Fed starts raising rates? It's going to work as well as, well, think of it this way. We do have a way to measure that, Mike. We have CPI numbers, we have PCE numbers, and we can just look at the commodities themselves. But remember, the Fed just started raising rates. And really, if you think about it, and this is really sort of the simple math of it, the only way to sort of have rates start to take a swing, put a dent in inflation is to start getting the rates competing with the rate of inflation. We're nowhere near that right yet. And again, what we want to do is focus on whether or not corn, crude, PCE, CPI, even some of the more inflation-oriented names, Archer Daniel Midland, the DBA ETF. What are those names doing? So I don't think I don't think we're anywhere near that yet. Although clearly, we're probably at the beginning, the very, very, very beginning of the end, if you want to look at it that way. But we're traders, right? If this might be something that's going to end in months, so be it. That'll probably give us plenty of opportunity to continue to take advantage of these. So I'm just going to keep measuring it. I know everyone wants to have a timeline. It doesn't exist, Mike. Yeah, that doesn't exist. We know that once they start raising rates, like I said, you can look at it as the beginning of the end if you want, but we don't know how long it's going to take until the market starts to reflect back to the FOMC, back to us, that we're seeing that rate of inflation flatten. All right, next up. Hey, Chris, I'm in your mastery group. Very cool. And trying the futures group this week. Awesome. I think I have an idea of the basics of futures, but having a hard time wrapping my head around pricing and huge margins. Any advice? Pricing, I will tell you, Chris, just ask us when you're in the room what the per tick value is from a dollar perspective. As far as the margins, yeah, I mean, there's two ways around the margins. One, what is pricey? I don't know. I'm not going to presume to guess what's pricey for you, my friend. But, have a line in the sand as to what your budget for the trade is. There's two ways a lot of traders in futures have found a way to deal with wanting to trade futures, but, navigating around the high initial margin requirement. One is day trading. That's probably the most obvious. Traders day trade many futures contracts now because day trading margin is incredibly affordable. It doesn't make the per tick, per point value any less, which is why I do not feel traders who are day trading, even though the margin requirements are so low, it is not a small account friendly approach. So again, it really depends on what size account you have and whether or not even the day trading would make it affordable. Options on futures, very powerful, far more affordable, far easier to quantify a worst case scenario when you're long calls or long puts because your risk is the debit that you're paying. Or you use the futures to chart the Dow, the NASDAQ, the S&P, the Euro, the crude oil market, gold, whatever. And then you go take advantage of options on the ETF alternative, which I talk about quite a bit in the futures room. I talk about that actually a lot because I know a lot of traders want to play the NASDAQ, but even NASDAQ futures options are quite pricey. So QQQ, XLK, XLC, XLY ETF options are far more affordable. So we find ways to take advantage of a theme, sort of a futures first approach, and then we find that affordability within it. So that's what I would recommend. And great question, Chris. All right, moving on. Hey there, Mark. I've been in trades where we exceeded the first and second target. Cool. Yeah, we have quite a few of those in the mastery. These are obviously awesome problems to have. What should we consider when deciding to continue to hold a stock past T2? So Mark, in the mastery, if you'll notice, by the time I'm sending out a T2 for any of our trades, and Obviously April's off to a great start. March was incredible. I think we almost had, not that I'm seeking this in any way, but we almost had a 100% win rate in March until we got stopped out of two paper cuts at the very, very, very end of the month, and April's starting off very, very well for us. You'll notice a few things. When we hit the T1, what's the plan? Break even. When we hit the T2, when I send out that alert, you'll see I'll put in a trailing stop in with that. So if there's a T2 out there and I haven't sent you a trailing, when I see you all in the room, let me know. Hey, Rog, I need a trailing stop for this particular trade. But when the T2 goes out, most of the time, say 80+% of the time, I'll have a trailing stop also in play with that. So what are we going to consider this time of year? We got to consider proximity to earnings. I do not, as a habit, want to take our trades through earnings, right? I do not want to do that. So there's that eject button, time-based exit that earnings are going to present us. And then there's, the expiration. We have a number of positions that I believe, let me see here. Actually may not, Halliburton. I forgot our awesome UNG trade. And XLE. We have a couple of these that are going to expire this Thursday. So remember, we have Thursday expiry, April 1/4. So sometimes it's just going to be we have to get out because we put a quarter in the machine and the ride's over. So that's going to be part of it too. So we have the price-based exits, whether that be break even, trailing. It's going to be earnings exits, hit the eject button. It's going to be the actual expiry of the option, hit the eject button. So those are things we keep in mind for anything that's continuing to trend in our favor. And again, awesome problems to have, but excellent question, Mark. All right, next up, high interest should be good for banks. Look, that is the general consensus, and a lot of times traders throw those things out there. But remember, we're not high yet. And I've heard that typically a threshold of about 3% is where banks say, yeah, this is good for us. So where we are right now and where XLF sits and where KRE sits communicates very clearly to us, right, Ashraful, that we are not seeing that narrative discounted. So yes, I agree with you, but we're not seeing it yet. Exactly. XLF and KRE are struggling. So what could be the reason? Sometimes I have to remember, because I have a tendency to want to dig deep and Google this and research that and crunch the numbers. Sometimes it's just okay to say more sellers than buyers, because at the end of the day, that is really the only answer. More selling pressure than buying support, or more buying support than selling pressures. More sellers than buyers, more buyers than sellers. That narrative just has not gained traction yet, which is a really good reminder that we don't want to just kind of pigeonhole the market into these sort of correlation. What's that? There's a name for that reflex when they tap your knee and it swings up, that reflex. We don't want to presume the market works in that reflex type manner, right? So great question. And no, it has not gained traction yet. One way to think about when and how we're going to gain traction would be through the multi-charts that I talk about. And I do a very old school methodology of scanning for opportunities. And it's still, I will tell you all, just still the best thing I've ever found in terms of finding consistency within high concentration weighted names. And that's the way the markets move nowadays, gang. So what I would say is I would pull up XLF. There we go. I pull up XLF and start asking, are there any outperformers to the upside yet? Other than Berkshire Hathaway, I would say maybe American Express, maybe Schwab, because they're really just one of a handful of names that are trading above the 200 propulsion, the 200 exponential. So keep an eye on names that are able to start getting above, maybe SPGI. You can go past the top 11 weighted names, see if any of the lower weighted names within the XLF are starting to gain traction. But you might find that a boat, an individual stock. So I have an analogy that I use for the markets. You've probably heard of it. I've used it for years. Boats and tide. Tide is the index. Tide is the sector. Tide is the niche. Boats are affected by the tide. So I might look for a boat that's sort of powering against the current tide at the moment, and see if we can find success there. And then you'll see maybe there's another boat and another boat and another boat that's starting to gain similar traction. And until that happens, we want to be really, really, cognizant of what we're dealing with. So great question. Hey there, Michael. Charting grooving on a Sunday afternoon. I know they say hard work pays off. Well, chart work pays off too, doesn't it? Now, I love it, Michael. All right. Hey there, Jack. Have I struggled with over trading during my career? What are my suggestions to break this habit? Jack, I probably struggle from the opposite, right? I think if you look at a scale of over trading to under trading, I probably tend to be too conservative. So I don't know why. Well, I can think of a number of reasons why, but um, they're all going to be personal to how we funded our account, our age, our risk tolerance, whatever it may be. So having had a very limited grub stake starting off and being quite young, I was very choosy about my trades. I was very cognizant about knowing that trading is indeed putting your money in harm's way, clearly for a payoff, but it still is putting your capital, your money in harm's way. So I was very cognizant, very sensitive to that. And I don't know that I've let that go. So consequently, if there's anything in my trading that I still sort of struggle with, it's being more aggressive, both in number of trades, in levels, and in size. And I talk about this very openly in the mastery. All of us struggle with some aspect of trading. There's no perfect trader out there who's conquered all their trading demons. Mine tends to be being very conservative, not being too aggressive, and not trading a large size. I'll trade a large number of positions relative to my account, but I don't tend to sort of push all my chips in the middle of the table. So again, I don't know if one's better than the other. I think they both come with their good and bad. But as far as over trading goes, I can tackle the second part. So Jack, it is discipline, and sometimes discipline, there's no smart, what is the meaning? And this, I know I don't want to get all woo on you here, Jack, but what is the meaning you assign to your trades? Oh my gosh, I'm going to miss out making money. Other people are making money. I don't know. But you have to sit down and really ask yourself, what is the meaning I'm assigning to my trading activity? I explained mine, right? Every time I put a trade on, I know I'm putting my capital in harm's way. With that in the back of my mind, it's almost impossible to overtrade because my main thought isn't, oh my gosh, I'm going to miss this trade. Part of this is having done this for over 30 years, where I know for the most part, there's always going to be something else around the corner. So I would start with, I could say something easy along the lines of cut your trading activity in half, but you might say, of course, Rog, if I could, I would, right? So I would start with, in the beginning, look, I journal and journal and journal and journal. Doesn't matter if I journal in these tiny little, no kidding, I'm going to show you something. These little tiny little notebooks, these things. So I have dozens of these things, and I probably fill one up every 10 to 15 days. And I carry this around with me. It's a little, notebook, and I'm always writing all this stuff in here, working on my mental approach to my games. And I carry this with me and think about this stuff all the time. So when I tell you, write down what meaning are you assigning to every trade that you take. And if you're finding a pattern, then at least you know what you need to work on. I hope that helps. I know it sounds woo, but that's really very much something that I still work with. I still, we've had a very good run in the Sector Secrets room. It's tempting for me to do two things. I'm running into two things. One, there's the pressure of people think, right, Rog, we're used to winning, right? And there's a lot of pressure that then they're putting on themselves to keep winning. I'm putting on myself to keep finding winning trades. And yet I'm also trying to temper that with, we need to keep the money that we've made. And so I'm writing down constantly, Rog, only find the best setups. And if things get slow, communicate to yourself, communicate to the members why things are getting slow, right? Being very transparent about where we are. So maybe, you need to start with you, right? Having those. So I hope that helps. I do. I mean, that's such a great topic, such a great topic. Question on setting up notes for the next week. Will the French election have any impact on the Euro US? It could. I was curious about that too. That's today, whether or not the EWQ, 6E, FXE. So far, I'm not seeing too much. And Emmanuel, I hope it does. I hope we get another shot, a third shot at shorting the euro. We shorted it back at 114. We shorted it again around 111 and change. And I'd love to short it again. I'd also love to focus not just on the FXE puts, but now that euro, pound, and yen are weaker against the dollar, if the euro strengthens, UUP DX futures might pull back and we might get an opportunity to get long dollar index or dollar index ETF options. So I'm definitely, again, I don't know if it will, but to your point, we know it's a hot zone. We know it's a high impact scheduled volatility event. So awesome question. All we can do now, my friend, is wait to see if it does. And if it does, then we know that's a pitch that we can take a swing at. But we know that that event could trigger that volatility. And if the volatility is triggered and if it reaches our zone, we've got an opportunity. That's the mindset of a trader, gang. And I love the question. I love the question. Emmanuel asks, will core CPI on Tuesday or PPI on Wednesday be something to hedge a portfolio against? I do not hedge. I do not hedge. The only hedges in my life are in my lawn. Hedging is way overrated. I don't know what, I will tell you all straight up. I don't know what the preoccupation is with hedging. It is if let me put it a little bit more tactically, other than I don't hedge. If you, I, us, we are thinking that the markets are going to become more volatile, trade smaller size. Stay in cash, right? I don't believe in hedging. I just don't. I see it used all the time, and it ends up being expense. And I do not see traders actually do well with that when they look back over the course of hedging throughout their career. I think that they would be far more impressed with their ability, instead of to hedge, to say, well, if I've got this spidey sense, or I'm looking at an event on the calendar that tells me I might want to hedge, why not go to a smaller size? Why not trail a stop? Why not, there's so many other adjustments we can make. Hedging is absolutely something I do not do. So I'm probably the worst person to ask about it, because I find it an absolute waste of time. I never mince words with you all. I don't ever want to. Now, please hear me out. It doesn't mean if you're finding good success with it, I am by no means saying to stop that. All I want to be very clear about is I do not hedge. I have stop losses. I have position sizing management rules. We can stay in cash, right? We can enter our investments or trades with smaller size. There's a lot of other adjustments we can make. So great questions today, gang. From a macroeconomic perspective, hey there, Mr. Walker, what does the 10-year yield tell you about the economy? Rates are going up, my friend. That's what it tells me about the economy. I don't get cute with macroeconomics. Rates are going up, my friend. That's it. Rates are going up. And all the dominoes that fall, it's the rates are akin to dropping a pebble in a pond, and the ripples go 360, right? The implications of the higher rates are far more interesting to me. So that's why, for example, we are long puts in XHB and going to continue to look for opportunities in names like Toll, ITB. We went a domino or two down, saying, okay, sure, we could short ZN and IEF. We have a number of members who are. Sure, we could short ZB or get puts in TLT, no problem. But where else does that narrative go? And so, I don't want to have, it's interesting. I talk about this in the room with the members. I don't ever want to have analysis that just breaks down all the sectors and gives you a big, breakdown, almost as if it's a news report. I want to be much more tactical about the ideas And then, so if we're talking about the economy, where's the trade, right? So I want to go right to the trade, and I love it. So where does the 10-year map to? Where does the 10-year tell me about the trades I want to make, right, Mr. Walker? So that's where my mind goes, those corners of the market that I just mentioned. I hope that makes sense, and I hope that's helpful. We always want to be tactical, gang. When I go out there and read other, websites or whatever, free newsletters or whatever's on the television, and someone's always breaking down a market and giving all these assessments. I watch some people, I'll catch them one week on TV and they're bullish. The next week they're bearish. And then the third week, depending on which way the market went, they'll say, see, just like I told you a week ago. What they do is they throw so much spaghetti everywhere. At some point, they get to say, well, see, this is what I told you. So we have a rule in my room. I always joke with Lorna Bott. I say, no post, no boast. We don't boast anyways. But I'm never going to say, well, this is what I told you we did. No, either I posted it and it's an alert, or it's not. And if I didn't alert it, I'm not going to talk about it, right? So I'm always thinking about, where does the analysis map to the trend, and where does the analysis map to the trade? And then we all take it, and then we all can talk about it. So, general economic conversations other than inflation, GDP, monetary policy, money supply, those can take us tactically to what? What is the central bank going to do with rates and monetary policy messaging? And then where, again, do those dominoes fall? Higher rates for higher rates for the dollar are why we are playing Euro, FXE, and we want to play UUP. Higher rates for the dollar mean weaker Euro, stronger dollar, right? So we want to take it really specifically to, here's where the trade is, right? No post, no boast. So thanks for the question. Let's see. Hang on, guys. Let me scroll down the list here. John asks, since we know the yield curve will go back to normal eventually, can we go long 10-year and show 2 years of pairs trade? When, right, John? I won't, because unless there's a setup. So let me put it this way. If you have a setup, go for it. But I'm not going to arbitrarily put the trade on in the expectation that I'm just going to be able to wait it out. Because remember, if you take it in a futures contract, you're going to continue to roll over the ZN and the ZB. Or no, sorry, well, I mean, I don't know how you're going to, you're doing it with futures, you're going to do it with ETFs, you're going to do it with the options. So I guess the first question is, which asset class you're going to use and how much time do you think it's going to take? That's problem number one. Problem number two is, well, not even a problem, actually. It's a cool idea, John, but what's the timing? What's the trade? What's the setup, right? It's cool to have a strategy, and I think you're at the strategy level. Good big picture view. Now we need to get a little bit more granular. So I'm a trader, right? I'm not looking at, normally in most of my trading life, a 6, 12, 18-month time horizon. We're days to weeks. So that's not going to fit in that days to week time horizon. I hope that makes sense. But I think that's something you definitely want to pursue, and then find the setups that coordinate with what you're talking about. But that's not something on my radar, my friend. All right. Next up, when I buy options, how close to current price do I like the strike? Oh, Nick, I keep it really easy. And there's no secret here. There's no magical. Like I tell everybody, trading isn't about this unicorn of a strategy or some magic secret squiggle. It's just good old-fashioned understanding trends and hopefully not overpaying for options. So for me, I like at or slightly in the money. If it's a trend, I like to give myself more time. If it's non-trending, I'm not as concerned, and I typically don't like anything less than 30 days. So if you're in the mastery, you notice that we're in, for example, we bought CCJ. We've got May 20 expiry. We bought COP. We have May 20 expiry. So we have 40 days to expiration on 2 trending markets. When we bought the euro, wonderful trend. We're in June, right? June 17. So Nick, I wanted to give you some specifics. Notice those are trends. Look how much time I'm giving myself. Look how much time I'm giving the members in the master. I hope that makes sense. Okay. So yeah, John K. and Emmanuel, that's exactly what I'm saying. The drawdown and the uncertainty would be where I'd get hung up. Yeah. Yeah, I would be. So as far as the expiry, you remember, you noticed 2 to 3. So Nick, Emmanuel, yeah, you're going to see I'm going to be anywhere, not 2 to 3 months. For example, if it's a really good trend and there's a macroeconomic uh, wind at our back, the euro option of 68 days. I'm looking at my TOS platform. The euro options of 68 days to expiration, right? We have XLP trades going on, massive XLP, double 2x winner right now. I've got June 17, because I know there's a great trend there. It's a defensive corner of the market. So it depends on the quality of the trend, the reason for the trend. But you'll seldom see when we put a trade on that I'm going to be less than 45 days. Because remember, 20 to 20, 21 of those are very much impacted by time decay, right? And when we start closing in on 21, 14 days, remember, we're buying a depreciating asset. It isn't as if that theta decay, that time decay, is steady throughout the life of an option. It's actually exponential. So it's like slow, so it goes basically slow, and then it starts to accelerate. So if you think like that and remember that, that time is probably one of the best things we can budget for when we buy our options. Our options are really ideally going to be at the money with no less than 45 days. That's again, I don't get fancy, I don't mind to tell you, I don't get fancy about it. What the secret sauce is the timing, right? It's the timing that makes the difference. Okay, let's see. Yeah, except for XLC. Yeah, and CLOU. It was a bumper of a, yeah. I appreciate that. All right. Let me grab another question or so, and then we'll go from there. You used to receive my notes by email? Jorge, I never email the notes out. No, it's alert. We haven't emailed anything in a very long time, my friend. Very long time, years. The notes that I send you all go through the rooms. It's a room alert. It'll end up on your Simpler Trading mobile app. In fact, the notes that I send you all are super app friendly. You can actually open the app, click on the link of the notes, and you can read them right from your phone. So I make sure that they're very easy to read, very easy to access. And I don't know if you can see it, but that's how easy it is to read the notes right on with the charts and everything on the app. And then if you open it up on your desktop, is it just called a knee-jerk reflex, Grace? There's not some fancy name for it? Oh, okay. Knee-jerk reflex? Then yeah, thanks for that. Awesome. Rapi, I believe my next day trading class is going to be in June. Don't hold me to that because I haven't gotten final confirmation from the office. But yes, the next day trading class is going to be in June. Emphasis on volatility, the kind of market that we're in right now, dealing with volatility chop, sort of forecasting the volatility is what we're going to be focusing on. And that, I believe, is going to be in June. But again, I don't know for sure. And boy, that 30 minutes goes by fast. Gang, thank you as always for being here. This is not coffee. This is just a little bit of nice cold water. And thank you for joining me for our Sunday weekly notes live. Notes are sent out as an alert. They're in the room drive. My sector secret mastery folks, I will see you all in the morning for some day trading. And then remember, we got a 2 for tomorrow in the Sector Secrets Mastery Room. Day trading in the morning. We've got the very first quarterly long-term ETF, long-term portfolio bonus coming up 2 p.m. If you haven't joined us yet, it is not too late. I believe it's still simplertrading.com. Yeah, what the heck is it? You know what? You think I'd have this stuff handy. I think the link is still simplertrading.com. It might be sector and join or join and sector. I'm not really sure. But yeah, we got that tomorrow. Is the Lorna bot telling me what it is? Oh, it's pinned above. All right. Lorna said it's in the chat somewhere. All right, bot. I think I've got the right link though. No. Join.sector or sector.join. It's one of those two. It's one of those two. But yeah, you can still join us tomorrow. Anyways, thank you as always. Am I still holding FXE? Yeah, we still are holding FXE. Absolutely. Remember, we've got those further dated out options, so I'm not in any rush to get out as long as the trend is in our favor. Put in the trailing stop and go from there. All right, the bot's trying to tell me something, and she said it's join sector. All right, yep, so I got it right. All right, gang, thank you as always. Check out the notes. I will see you all for charts and coffee first thing, 9 a.m. tomorrow, Monday morning. Enjoy the rest of your Sunday evening. Thank you for joining me for this session, and I will talk with you all soon. Be good to each other.